July 9th, 2020. Welcome to the WebTV Market Review. Don't forget that this is part of the discussions of how the financial and capital market continues to impact the economy. Let's give you a lineup of what we'll be discussing today. First, 13 companies listed on the exchange that failed to comply with the Nigeria Stock Exchange unaudited financial statements compliance for reports. Notifications of board meetings of quoted companies in the exchange. Also bringing activities in the FX commodities exchange market. We'll also look at expert views on COVID-19 pandemic and its implications for corporate finance. Also today, we'll be looking at a wrap-up of activities that occurred in the equities market yesterday and developments in the foreign exchange market. Let's begin with the stories from Nigerian Stock Exchange, which informed the general public that the companies listed that failed to comply with the exchange directive to issue a press release as set forth in the deficiency filing notice issued to them. According to the Nigerian Stock Exchange, the companies include ASO Savings and Loans, Deep Capital Management and Trust Limited, DN Tire and Rubber, FTN Cocoa Processors, Goldlink Insurance PLC, International Energy Insurance, Medview Airline PLC, Result Savings and Loans PLC, Staco Insurance PLC, Standard Alliance Insurance PLC, Unique Diversified Holdings PLC, Union Daikon Salts, and Union Homes. The above listed unaudited financial statement became due on 29th of June 2020, being the extended due date as granted by the exchange. By virtue of non-filing of the UFS by due date, the companies have violated Rule 112, Rules for Filing of Accounts and Treatment of Default Filing. This is the rule book of the Exchange Issuers Rules, which provides that every issuer shall file its unaudited quarterly accounts not later than 30 days, that's 30 calendar days after the relevant quarter, and publish it within 5 business days after the date of filing in at least 2 national daily newspapers and post it on the company's website with the web address disclosed in the newspaper publication. An electronic copy of the publication shall be filed with the exchange on the same day as the newspaper publication. Pursuant to the provisions of Rule 221 of the rules, the exchange had issued a DFN to the aforementioned companies. The purpose of the default filing notion was to notify the companies of their infraction and to grant them 3 days to provide the following information to the public through the medium of a press release. That the relevant unaudited financial statement had not been filed by the due date. That a detailed explanation of the reasons for the delay and the anticipated filing date or state that the company is unable to indicate an anticipated filing date and reasons for such inability to indicate the anticipated filing date. The defaulting companies failed to comply with the exchange directive set forth in the DFN, and in light of the company's continued breach of the Rule 221 of the rules, and in line with the requirements of the Rule 222, the exchange hereby advises the investing public as follows. A default filing note has been issued against the aforelisted companies, and investors are advised to trade with caution on the securities of these companies in the absence of up-to-date financial information on them. The investing public is further advised that the exchange will continue to engage with these companies and may take the following additional steps should they fail to comply and file their unaudited financial statements within the 90-day cure period stipulated by Rule 3.1 of the rules, that is 27th of September 2020. And part of this is to send to their aforelisted companies a second filing deficiency notification within 2 business days after 27th September 2020 and suspend trading in the company's securities. So that is for those 13 companies listed that failed to adhere to the unaudited financial statements and the default finance notification of the Nigeria Stock Exchange. The investing public have been advised to trade with caution with all those companies, and you can get further insight on it by logging onto our website, www.prochange.com. In terms of quoted companies and their plans for meetings, at the 2019 annual general meeting of the Computer Warehouse Group PLC, the company, which was held by proxy on June 2020, the chairman of the board of the company laid the audited financial statement for the year ended December 31st, 2019 before the shareholders. Subsequently, the following resolutions were considered and duly passed. The appointment of PKF Professional Services as the auditors of the company and authorization of the directors to fix their remuneration. The election of Mr. Akinsola Akinyemi, Mr. Ajani Wahab Abidoye, Mr. Ibekwe Roberts Adinuba as shareholders' representatives on the Statutory Audit Committee, and the nomination of Mr. Abiodun Fawumi, Dr. Olusegun Osho, and Mr. Wale Agbeyangi as directors' representatives on the Statutory Audit Committee. The approval of the nomination of the directors of 1.2 million and 1 million for the chairman and other non-executive directors respectively for the financial year 2020. Now let's go on to Access Bank. Access Bank has announced that its wholly owned subsidiary in Zambia, Access Bank Zambia, has entered into exclusive discussions with Kavmont Capital Holdings Zambia PLC regarding a potential transaction between Access Bank Zambia and Kavmont Bank Limited, a wholly owned subsidiary of Kavmont Capital. The potential transaction relates to the sale of 100% of Kavmont's capital's interest in Kavmont Bank to Access Bank Zambia. There can be no certainty that a transaction will be agreed, nor as to terms of any such agreement. The completion of a transaction will be subject to formal regulatory approvals. Access Bank will update the market as appropriate and in accordance with disclosure obligations. Accordingly, all shareholders are advised to exercise caution when dealing in Access Bank securities until a full announcement is made to the investment public. Access Bank, as we know, is one of the major banks in the country and quoted on the Nigeria Stock Exchange, and was on top of the news when it achieved the merger with defunct Diamond Bank. Now let's go on to the AFEX Commodities Exchange and what's really happening there. The AFEX Commodities Index Composite experienced a massive uptick to close at 246.46 points in the week under review. The index performance appreciated by 21.31% week on week for last week due to the positive market performance of the maize and soybean sub-indices against the previous week performance in the week under review. On the flip side, paddy rice fell slightly by 1.08% to close the trading week at 175,000 per metric tons of maize, and soybean appreciated by 37.33% and 2.50% to close the trading week at 161,167 metric tons and 134,275 metric tons respectively. Export commodities, ginger and cocoa also experienced losses of 5.37% and 4.65% to close at 773,667 metric tons and 873,262 metric tons in the week under review. In the open market, maize, soybean and paddy rice experienced slight price changes, while sorghum, ginger and cocoa maintained their price levels from previous week. The aggregate volume of trades executed in the week under review totaled 488,775 metric tons, with maize accounting for more than 75%, that's 367,058 metric tons of the total traded volume. That is insights from the AFEX Commodities Exchange. Let's go to the liquidities market. What happened yesterday? The liquidities market was very, very positive. It closed on a positive yesterday as NSE appreciated. NSE All Share Index appreciated by 0.75% to close at 24,278.07 basis points, as against plus 0.30% appreciated recorded previously. That means subsequent back-to-back positives. Its year-to-date returns currently stands at minus 0.955%. Market bread closed positive as WAPCO laid 25 gainers as against 8 losers. The 8 losers were topped by Berger at the end of the session for yesterday. Improved performance when compared with the previous outlook. So that's an interesting insight from the equities market. And you can get further insight on a wrap-up of performances in the equities market on a market opening gong every morning from 7 a.m. Now let's look at experts reviewing the impact of COVID-19. Experts have been speaking about the impact of COVID-19 on corporate finance and the future. And that's very important for those in the corporate finance space to take a look at how this is going to impact the corporate finance world. In the emerging local Nigeria realities, the post-COVID-19 industry gainers will include the following, and this is for all investing public to look at companies listed that cover these various sectors. First is agriculture and agro-allied businesses. So you'll be looking at companies in that space listed on the market, beneficiaries, thriving sectors to watch. Machinery fabrication plants, so companies that are involved in machinery fabrication listed on the exchange will definitely be companies to watch. Healthcare and pharmaceutical firms, we can't even overstate that. We've seen already what's happening with companies like Neymet and May and Baker. Digital commerce platforms, so in essence, digital companies will also be ones to watch. Agency banking and fintechs. So in a nutshell, those are the gainers from the analysis from this pandemic. Who are the losers? Who are those that are going to be adversely impacted and will feel the heat? They're already feeling the heat, will still feel the heat of this pandemic. First, and of course not surprising, is the airline and ancillary businesses. The airline services will be feeling the heat and impact of this, and this explains the massive layoffs, pay cuts that are experienced across global and African airlines, including Nigeria. Hotels and hospitality services, badly hit, really hit. I mean, we don't need to overstate that. We can see the trends across the world. Sports betting, contrary to the underlying sporting events themselves, will thrive. Well, it's interesting. Sports betting will be affected, but it says there has underlying factors there. And those who are involved in that can really tell you how it's been impacted. Retail shops, why is this coming to the fore? Because they are casualties of social distancing rules. And of course, commercial transportation. Now, we've had an easing of lockdown in Nigeria, but people will definitely take cautions, even though we're still seeing transportation activities happening. Looking at the international scene, the consequence of COVID-19 will see similar losers and gainers across industrial sectors. Let's go to debt or equity. I mean, we just had a conversation in the Economy and Politics show talking about Nigeria's debt and revenue, but there is an opportunity in terms of equity. So they're looking at the financing problem. As COVID-19 restrains equity investors from committing more funds to businesses, a growing number of large corporations are opting for the debt market solution, such as fixed interest commercial papers. Dangote Cement has raised 100 billion naira in 5-year notes from an 300 billion naira issuance program, while Mixta in the real estate business raised just under 10 billion naira in medium-term notes between 2017 and 2018 on the FMDQ Security Exchange. The results to the debt market shows a growing appetite for corporate debt as new equity issues have proven difficult. Even Nigeria's most successful microfinance bank, Lift Above Poverty organization, LAPO Microfinance Bank, has only listed its debt on the Nigeria Stock Exchange in June 2020. That's about 6 billion naira issuance. Debt increasingly appears to be the financing route of preference as COVID-19 makes equity even more difficult to raise as cash flow uncertainties and difficulties in establishing the proper valuation for companies and equities have spooked prospective investors in the equities market. But as equities issuance thins down, debt finance has proved resurgent, attractive, and accessible. The rise in the medium to the long-term corporate debt market in Nigeria, for example, may be an indication of the new direction of corporate finance, especially in the emerging markets of Africa. This may actually lead to a balancing act. And a major lesson from global economic crisis is that it should never be put to waste. COVID-19 economic challenge may be taken as an opportunity to rebalance the domestic Nigerian economy and raise opportunities in the non-oil and gas sectors. The fact that oil and gas contribute less than 10% of gross domestic product shows that most of Nigeria's economic output comes from a variety of sectors, of which agriculture is a major part. The improvement in the agricultural sector could expand and deepen supply chains and increase domestic employment as jobless rates decline. To improve local supply chains, the machinery and pharmaceutical sectors may need to improve their output and depend more heavily on local raw inputs. The machinery sector could provide locally made equipment and spares, while research and development in local pharma may improve overall healthcare resilience and protect the local health value chain. Nigeria should be capable of manufacturing personal protective equipment for frontline health officials, while also providing local drug solutions to the various health challenges that will inevitably persist after the COVID-19 curve has been globally flattened. The need to raise finance to bolster the local Nigerian healthcare sector is strategically non-negotiable, and private debt and equity raise in this sector is a major imperative of local corporate financiers thinking forward. That's very important. Based on our interactions with CEOs in pharma companies, we need that at this time. Now, where does private capital pay? With the world likely to be awash with financial liquidity as governments globally adopt new fiscal and monetary initiatives to drive growth or stem recession, private investors will be looking for superior returns that do not come with outsized risk. Emerging markets with their typical gaps in social and economic infrastructure may retain their attractiveness. Nigeria, barring corruption challenges, could be at the top of the investors' pecking order as a few sectors look strongly attractive with the right policy framework in place and a free market price discovery process allowed to work. Some examples of sectoral opportunities include, but are not limited to the following: power and energy sector. This sector has been a historic nightmare, mainly because of the intrusion of the public sector in pricing and distribution. A cutback in government intervention and cost-reflective pricing regime. No, let me take that again. A cutback in government intervention and a cost-reflective pricing regime, albeit with some built-in price discrimination for very low-income communities, would make equity and debt investment in the sector more compelling. Long-term financing can be attracted to the sector if revenue leakages are reduced to the barest minimum and retail tariffs are reflective of the underlying business realities of power supply. Road infrastructure. The road construction sector can be funded on a build, operate, and transfer, or build, own, operate, and transfer for operating terms of between 25 and 30 years. At the time COVID-19 places challenges on government's fiscal resources, allowing private capital to be mobilized to build world-class road networks seems sensible. The usual problem with this arrangement is the perennial refusal of the government to respect the sanctity of contracts. If governments at the national and subnational levels can step out of their way, then COVID-19 inspired liquidity could lead to the rapid growth of road infrastructure, which would reduce road travel time, vehicle maintenance expenses, and the cost of domestic logistics. The economy benefits will be excess, and it will exceed economic cost. Agriculture and agro-allied business is one of the areas private capital can come in. The agro sector provides several production and supply chains that could serve as opportunities for medium to long-term finance to achieve superior returns at fair market-determined risk. With a variety of federal government agricultural support programs offering concessionary loans, the potential returns from sector could be significant, especially in areas such as sorghum, maize, cassava, barley, and soybeans. Investment in cocoa, pineapple, mango, and watermelon could equally prove profitable. Indeed, paddy rice processing would prove important at a time the country tries to ensure food security. The Nigerian market presents massive investment opportunities in a post-COVID reality, with older industries redefining their purpose and newer businesses setting up to lead in emerging consumer demand. The proposition for both longer-term debt and equity to thrive in this so-called new normal underscores the need for financial professionals to design instruments that build new uncertainties into corporate cash flows and provide more robust frameworks for determining corporate violations. As part of the emerging financing reality, mergers and acquisitions within traditional and newer economy sectors will bring about stronger entities and more creative solutions to business sustainability. And this is where Kemi Owonubi, the corporate finance head of RMB Nigeria, in a recent post on these days said, there would be opportunities for sizable M&A deals in non-discretionary sectors as demand will be relatively resilient across critical sectors such as healthcare, grocery and food, retail, other consumer staples, telecommunications and logistics. While companies in the discretionary sectors who entered the crisis with high leverage levels may present bargains for investors with restructuring occurring where the business is a good fit to the existing strategy. According to her, M&As will remain active, though typically deal-heavy sectors may slow down. The activity will continue to be driven by value opportunities and consolidations across sectors. And in Nigeria, it seems to hold opportunities as fast-moving consumer goods may also present plausible options. They may also be consolidation opportunities fueled by need to survive and the general realignment of property prices in the real estate sector, as properties investments are realized for more optimal use of cash. So in perspective, looking at deals and what should happen, the disruptions caused by COVID-19 to transactions in progress, the lack of predictability of operating cash flows and income streams builds additional layer of risk into previously stable business models, thereby making corporate valuations very much a hit or miss gamble. The increased difficulty in predicting income and cash flows in a time of global health pandemic is compounded by the uncertainty related to the weighted average cost of capital. The required yields in a period of volatile capital costing have left finance professionals in a quandary, as rising domestic and global liquidity has not necessarily translated to lower financing costs in countries such as Nigeria. But what has become evident is that people, connections, collaboration, and deliberately reinforced confidence are key factors in achieving deal-making processes. That becomes very important in these times. And that is something that everyone should take note of and really, really look at as we go forward in the program. So let's go on to some other interesting developments that we have in the market as we try to weigh on how activities are shaping up in the Nigerian capital market. Like we took the initial wrap-up that 13 companies had failed to comply with Nigeria Stock Exchange unaudited financial statements, default notes. There's been a notification on Computer Warehouse Group's meeting. And of course, developments from there, FX Commodity Exchange reports. We've given you updates from the activities of experts talking about corporate finance in the country. Now let's look at what is happening in the market. And of course, you all know that the biggest story this week has been the Central Bank of Nigeria's decision to move towards the unification of interest of the exchange rates, which is now at 380 naira to a dollar. Initially, we're looking at 360 naira to a dollar. And so that has been the development in the foreign exchange market. How is this playing out currently in the market? It's of very big interest. And from the central bank's activity, we take this from Zcrest Capital in terms of the FX market activity. So far, what was the performance like yesterday? It remained sluggish. Yesterday, the FX market remained sluggish as pent-up demand remained unmet due to the scarce supply of the greenback. The import and export FX window depreciated slightly by 0 naira 25 kobo with traded volume of about $11.96 million, dropping a whopping 88% day on day. At the parallel market, the cash and transfer rates moved the most in recent times, depreciating by an average 1 naira 25 kobo day on day to close the day at 460 naira 50 kobo to a dollar and 463 naira 50 kobo to a dollar respectively, following a fresh wave of retail demand hitting the market. That was the developments that occurred in the FX market space and of very important interest to how the central bank operations have been. In terms of the euro bonds, the Nigerian sovereigns weakened in a relatively quiet session, with yields expanding by an average of 9 basis points across the benchmark curve, but little volumes traded. In the sub-Saharan Africa space, the Angola papers continued to weaken as we saw continued sell-off from profit takers, especially on the 2025's maturity, while its yield rose by 20 points day on day to close at 13% levels. On the flip side, some Nigerian corporate tickers saw some improved demand interest from local investors, most especially the Fidelity Bank 2022's tenure that went on by -7 basis points. It also noted some weakness in the UBA, Nigeria Limited, 2022 tenure of +56 basis points, and the Ecobank Transnational Incorporated, Nigeria Limited, 2024's tenure of +13 basis points. Although Zecres expects this weakness to be short-lived in light of an improved outlook for global oil prices. So the global oil prices will be key to watch as we continue to reflect on the activities in the Nigerian market. Very important. That's coming from the money market analysis of what's happening in the country. And so, yes, we will continue this conversation on the Nigerian capital markets, the financial market, how it impacts the economy. We'll continue to discuss this tomorrow, but just want you to note at this time that we are facing an unprecedented period of crisis and, of course, shaped by the crude oil price shock and the COVID-19 pandemic. In times like this, we have people through various platforms who try to take advantage of investors. We advise all investors and the populace to be wary of platforms that promises you over 100% returns that are not registered or regulated by the Securities and Exchange Commission. Please, this is a time for you to make value with the monies you've saved and worked for. Do not put your money into platforms that are not registered or regulated by SEC Nigeria. And if you need further clarifications, you can log on to www.prochange.com to get all those information around platforms or operations that have credible investment options. Also, the Securities and Exchange Commission of Nigeria will be periodically releasing reports which we always publish and also bring to you on this program. We really have investment public at heart and will continue to push for clear awareness, understanding of the market before investing in any platform or any activity, because we have a long history of various platforms that have come on board and have swindled many and caused many to lose their investments and even all their savings. And that is not what we want to continue as a trend. It's been nice having this conversation with you. Of course, you can join our website, www.prochange.com, to watch our videos with our reports, news, and analysis. Let's make it a wonderful, interesting conversation tomorrow on the markets, same time, 10 a.m. tomorrow. To come your way again, thank you for watching. Have a nice day and stay safe.